everyone, welcome to our channel Fintoo and you are watching Friday First Cut series. I am Nidhi Manchanda, Certified Financial Planner and Head of Training Research and Development at Fintoo. The Indian rupee has fallen to record lows amid the worsening risk sentiment and the continued spree of overseas outflows from domestic equities. The rupee fell to an all-time low of 77.6125 against the US dollar due to a sell-off in equity markets. Now let us understand why we saw a major sell-off in equity markets. The first reason being hike in the interest rates by US Federal Reserve. The second reason was weakening global economic growth prospects. There were growth concerns in China because of COVID-19 surge and also because of COVID-19 lockdown supply disruptions, and another reason was war between Russia and Ukraine. All these factors led to a fear about how the growth will hold up around the globe. Third reason is further tightening of monetary policy by central banks to counter the rising inflation. Fourth is persistent FIIs outflow. India has witnessed an FII outflow of around 1,95,000 crores so far this year, and if we compare it with the last year, that is the calendar year 2021, in that year this figure was around 92,700 crores. Apart from this, an unabated rise in the dollar index towards a 2-decade high, soaring US Treasury yields and crude prices, all of them have worked their way to push the domestic currency on a downward trajectory. Last factor is outflow of dollars. So continuous high crude prices is leading to outflow of dollars. So these were some of the reasons why we saw a major sell-off in equity markets. And now let us move on to understand how it will impact India. As we import 80% of our crude and crude prices are not coming down at all, thus falling rupee makes us a little more vulnerable as compared to other Asian economies. It is putting pressure on our current account deficit, and this is definitely not a good sign for our economy on the external front. It is worrisome as this would also increase the trade deficit, resulting in an expected current account deficit of 3% and impacting the balance of payments. Now moving on to understand how it will impact your life. Now the biggest impact will be on inflation, which is already very high. In April, inflation jumps to an 8-year high of 7.79%, and in an economy where the inflation is already so high, any further depreciation in the rupee will hit us primarily through the inflation route only. Second is imports. Oil imports will get costlier and thus it will definitely impact the consumers. Third impact is on loans. To control inflation, RBI increases the repo rate, which in turn makes the borrowing cost expensive. And we have already started seeing this happening. Next impact of rupee depreciation will be on the stock market. So we can see the decline in the equity markets and stocks, and also your equity mutual fund investments can see a sharp fall. Foreign education and foreign travel will also become more expensive. So in such a situation, what can RBI do? RBI can only try and smoothen the decline, and fortunately for us, we have forex reserves. Though the reserves have fallen to slightly less than $600 billion, there is nothing much that RBI can do except to ensure that the spikes are not very sharp. So as of now, there is no need to panic, but definitely there is a need to be concerned about this global situation, as this is a global risk-off and we have been behind the curve as far as inflation is concerned. Now let's talk about future expectations of USD INR. With USD INR comfortably above 76.5 mark, we expect immediate up move towards 79 in the next few days. We expect equity markets to stabilize after USD INR completes its intermediate target of 79. Until then, high volatility in equity markets may persist. I hope this video was useful. For any further query, feel free to get in touch with our finance and tax experts. And for more such videos, do subscribe to our channel.